Let me start. Sorry, I should say first of all that I'm Stephen Henwood. I'm the chair of the ATI, and it falls to me to introduce this session on market-based side of our presentations today. I've been around in the ATI for getting on for 18 months now, and so it's been great to see the work that's gone on with the ATI and many, many other people to get us to today where we can formally launch the technology strategy. So welcome. I think many familiar, dare I say, friendly faces in the audience, and some I don't know, but you're all very welcome indeed. I also have this slight feeling that as I look down the guest list, that I'm preaching reasonably significantly to the choir in this, so that people are very committed to what we're trying to do. Well, it's nice to have a friendly audience, at least as I start. So it's great to have so many stakeholders from across industry, academia, and government here this afternoon. Today is an important milestone for the ATI as we publish our first strategy. As you know only too well, aerospace is a major economic contributor to the UK. As you'll see in the following presentation, it's helping to drive success more broadly in other sectors too, a really important issue as we look forward. The global outlook for the sector is exciting, and there are real opportunities for the UK to enhance its position in this highly competitive market, provided we maintain support to the sector and act with ambition and determination. The ATI is a new approach in seeking growth for a distinctive and successful industry. We are building on success, not starting with a blank sheet of paper. It's helping to drive, it is a central component of the aerospace industrial strategy and seeks to deliver an expanding programme of technology acquisition that is linked explicitly with UK economic impact. And we are really keen that we get across the balance of technology and delivering benefit to the UK. And to some extent, that's why we have these two sessions here today. It is one element to meet the challenges ahead, and in conjunction with the skills, manufacturing, supply chain initiatives of the AGP, the Aerospace Growth Partnership, can make a major contribution to delivering the UK's broader economic agenda. Our mission, through the 2.1 billion R&T investment committed by the government and industry, is to grow the UK's economic competitive position, ultimately safeguarding and enabling new jobs and value creation. Aircraft are becoming ever more complex. New aircraft and upgrade opportunities are becoming harder to anticipate and prepare for, and the economics of aircraft development more challenging. These factors make aerospace technology research particularly difficult to pursue. It's in this context that we have developed the technology strategy. The major challenge our mission raises is the need to link early stage, ambitious, risky technologies with economic impact and job creation in the future. Our approach will continue to evolve as we promote debate about the vision and ambitions for the sector. We allocate finite resources and seek to catalyse change. And of course, some of those processes will also involve making choices and setting priorities, not always a comfortable process. We will work closely, however, with industry, academia, and the other parts of the AGP agendas to adapt the strategy in the evolving market, build upon the foundations created so far to unlock even more value from the ATI. Technology and productivity are critical ingredients to enhancing the UK's global position in civil aerospace. This underlines the need for a holistic approach to technology strategy that recognises the needs and contributions of supply chains, universities, and other research facilities, as well as major companies and their routes to market in seeking to create maximum economic potential. The public document we are releasing today provides a high-level view of the UK aerospace technology. That was a slip of the tongue, wasn't it? We've got ambitions for Europe later, but that'll be another presentation another day. A high-level view of the UK aerospace technology strategy. It is supported by more detailed papers and some more confidential papers addressing market alignment, priority value streams, and enabling technologies. We encourage you to register and engage with the Institute to take full advantage of those resources, which exist for the benefit of all organisations participating in the growth of the UK aerospace sector. After that introduction, I'd like to hand over to James McMicking, who's our Chief Strategy Officer. I'm going to walk to the back. I'm not about to walk out, but I do need to be somewhere else, just slightly ahead of you, and rather than walk out halfway through his presentation, I'll be listening from the back. So James, over to you, and thank you all for coming.
Right, welcome. To deliver the economic mission Stephen has just explained, we are focused on helping the sector to achieve the following strategic goals. To make the UK a global leader in aircraft wings, engines, complex systems, and helicopters. To do this, it involves providing differentiated technologies and competitive supply options for associated subsystems and components. But we also need to ensure the UK is positioned to lead in future architectures and technologies in civil aviation. In February this year, we outlined some of the principles underpinning our strategy. It involves understanding both the full landscape of technology and the potential for it, but also potential future market opportunities that exist and linking those two together in a coherent manner. We do this through understanding the performance attributes that the UK will need to deliver to in those future opportunities through technology and capabilities. These create value through the products and services that the UK provides, creating this sort of virtuous circle you see here on the screen. Underpinning all of this thinking is a focus on economic impact and competitiveness. We structured that set of principles, and again, this is an image some of you will be familiar with from us, into a three-dimensional matrix. So market alignment, about identifying those opportunities, understanding when we need to have technologies ready at the readiness level 6, which is the focus of ATI, and also understanding the attributes that we've got to focus on in those time windows. Delivering to that market, we have 4 priority value streams: whole aircraft, structures, propulsion, and systems. These value streams are enabled through technologies and capabilities, of which 5 priority streams have been identified: aerodynamics, manufacturing, materials, technology infrastructure, and processes and tools. Combined, these make up the technology strategy and allow us to identify the major themes that are going to drive success through technology into the future. This is focused on markets where the UK can capture the greatest value. This is by some margin the single and multi-aisle large aircraft markets. But business jets offer a unique opportunity for the UK as well, and an opportunity for suppliers to regularly win business on new platforms that could later find their way onto larger aircraft. Helicopters is an important segment for the UK too, as we support a whole aircraft capability in that area, and also the supporting supply chain and high-value content for helicopters. Following secure, exploit, and position strategies, we'll focus that overall agenda. So secure, this is about the 5-year time frame and ensuring the UK is securing vital technology capabilities and developing them, as well as boosting manufacturing competitiveness. Over the 10-year time frame, it's about accelerating technologies and capabilities to capture those high probability near to mid-term market opportunities. And then beyond that, over the 15-year horizon, preparing UK aerospace for long-term success through game-changing technologies. And it's important to note from these 3 elements that they all start today. It's important that we pursue each in a balanced manner from the outset. These strategic priorities will be delivered through 4 primary themes at the highest level. This is aircraft of the future. This will seek to understand the implications of technology at the whole aircraft level and support UK suppliers to understand the value of their technologies at the prime level. It will also explore the limits of conventional aircraft architectures, evaluating the full potential of current aircraft configurations. Finally, it will understand the benefits and implications of more radical architectures and the relative merits of shifting to new forms of aircraft. Aerostructures of the future aims to prepare high-efficiency technologies for new aircraft, enabling more efficient aerodynamics and lighter and more intelligent structures. It will develop manufacturing technologies for low-cost, complex geometries and novel materials. This includes increased automation, of composite and metallic production systems and digitally integrated factories. Further ahead, technologies need to enable more radical approaches to aircraft architecture, including higher levels of structural integration. Propulsion of the future aims to improve efficiency, cut emissions, and reduce cost through complex geometries, novel materials, and new systems. Engines remain a vital source of performance improvement. Extracting that performance requires major technology change while reducing cost. To continue to improve propulsive efficiency, we must develop new propulsion architectures for step change performance, taking engines beyond their current paradigm. And finally, the smart, connected, and more electric aircraft aims to improve efficiency, cost, and systems and equipment, from landing gear to fuel systems, communications, and avionics. The theme seeks technologies to reduce the cost of products and improve their efficiency at the whole aircraft level. It will develop more intelligent, connected systems that enable improved maintenance, increased levels of automation, and more efficient operations of aircraft. It also aims to develop more electric aircraft architecture for lighter, more efficient, and more robust systems. These themes will deliver to an expanding market, and this will be significantly driven by the Asia-Pacific region. This region is seeing a significant growth in large cities, and this will place specific demands on future aircraft requirements over this period. Meeting this passenger traffic, fleet growth in Asia-Pacific is by far the largest. Demand for new aircraft will also be high in Europe and America to meet increasing passenger traffic, but also replace the current fleet. The ATI has conducted a set of analysis around the market on both the supply and demand side of the equation. And this indicates many new opportunities for the UK aerospace sector over the next 15 years. In the large aircraft market, covering wide and narrow bodies, there is potential for a new platform to satisfy rising capacity requirements in the medium-haul routes over the next 10 years. In both categories, updating is expected to continue, with new engine technologies, improved systems, and improved structures, all of which present great opportunities for UK aerospace. The narrow-body market is seeing new entrants emerging, and we expect this to also happen in the wide-body market over the next 15 years. For the rotorcraft and business jet markets, these will continue to see new platform development activity and updating. There's been a shift in focus towards larger business jets, with medium and larger types accounting for over 53% of deliveries last year versus 40% 10 years ago. The rotary market is growing towards the development of dual-use platforms, primary focus of revolving around increased platform availability, operational productivity, and functionality. These markets will provide regular opportunities for the UK suppliers to win work at the start of a platform's life. Finally, regional jets and turboprops are likely to be less active relative to other segments, although continue to fulfill an important part of the aviation market. Regional jets will need to keep pace with narrow-body developments to remain economically viable. Turboprops have seen little activity in recent years, and demand may spur further developments. Besides the formation of the technology strategy itself, the Institute is also focusing attention on the realisation of the strategy in three ways. Firstly, focusing effort on securing routes to market for the UK supply chain and complementing other support mechanisms. This means continued development of UK prime and OEM capabilities, but also improving the strength and diversification of suppliers through independent product and manufacturing technology development. Collaborative projects can also support the development of more differentiated supply chains. The focus is on high-value areas, particularly as aircraft technology evolves. ATI presents the opportunity to take on bigger challenges, and the focus is on more ambitious projects. SMEs are a vital source of innovation and will have opportunities to be part of these challenging agendas through collaboration. There are other support mechanisms established to support smaller organisations and supply chain companies specifically. We need to disseminate the technology strategy to those efforts and coordinate with them. The second stage of this approach is around shaping projects for particular economic effects. Maximising the economic impact means maximising the potential for economic spillover. Collaboration within the sector and beyond the sector, and the exploitation and development of national research infrastructure helps to achieve this. Encouraging higher levels of R&D in the UK means making the UK a better place to conduct R&D. Continuing to leverage our stellar academic and industrial networks, developing skills through ATI projects, and maximising the package of support available to industry are examples of how this can be achieved through the ATI. This positions the UK to capture downstream production opportunities. Finally, the ATI needs to engage with industry to ensure we are creating a pipeline that is achieving these focus and shape priorities. The third and final stage concerns the prioritisation of ATI project opportunities. Industry has responded extremely well to this programme, and the resources are stretched. This will require an objective evaluation system to support decision-making, the establishment of a rolling programme rhythm, and clear decision points to evaluate across projects to select those with greatest potential. Working with Biz and Innovate UK, we will be releasing more information about this in the near future. By following these steps, we will create a stronger portfolio and better ATI projects. Delivering economic impact to the sector is well known. The facts on the screen there I'm sure you're all familiar with. But the sector's economic contribution goes well beyond this. Because of its high-intensity R&D activity, advanced skills, and high productivity, it is driving a far broader economic contribution than these figures suggest. This spillover benefit is central to much of our thinking on the technology strategy, and I hope that's been clear on the slides I've just presented. At this point, I'd like to introduce you to Erik Britton, co-founder of Fathom Consulting. We asked Erik to conduct an independent study into the broader economic role of aerospace R&D, and specifically how ATI can make a difference at the macroeconomic level. This work has informed a lot of our thinking, as you will have seen. So at that stage, I'll hand over to Erik.
Thanks, James. Afternoon, everybody. There's a number of charts here which I'm slightly concerned you might not be able to see the detail of from the back. If that's the case, hopefully I'll describe them anyway, and if you need to refer to them later, they're all available in the slide, I guess, which are available, and indeed the report which we've written too. I'm not going to read that title because otherwise I'll have used up my 15 minutes. But basically this is, as James said, about thinking about the role of the ATI and the aerospace sector in general in contributing to growth, and particularly growth in productivity across the UK economy as a whole. And that is a big issue right now in macroeconomic policy. It always is, but it is one particularly right now. This is a quote from the Bank for International Settlements' latest annual report. It reads, "An essential element of this rebalancing is to rely less on demand management policies, that's to say less on stimulating things like the housing market, which we're particularly good at in this country, and more on structural policies, structural ones, so as to abandon the debt-fueled growth model that has acted as a political and social substitute for productivity-enhancing reforms." That's it. Thank you. Questions? I couldn't have put it better myself. That is essentially the structure of what we're arguing, and one way of rebalancing in that direction towards productivity-enhancing structural reforms is through initiatives exactly like the ATI in the aerospace sector. What the world needs, the UK needs, and in spades. Why? Because the UK has a major productivity problem. The chart on the top left of this slide is a chart that shows the path that productivity, which is the amount of GDP produced per person in the UK, has followed over the last 150 years. It's a very long-run chart. It goes back to as far as the data go in the UK. So the green line on this chart is the UK, the blue line on this chart is the US, The US has slightly higher productivity levels than we do, but the growth rates over a long period of time tend to be very, very similar. And broadly speaking, that number goes up year after year. In peacetime, it goes up. It may go up slightly more rapidly or slightly less rapidly, but absent the two world wars, which are the two big convulsions in that chart, the line just increases over 150 years. And it only goes back over that period because that's as far back as the data go. You could take that back as far as the year dot, and that number would go up, except for the last 8 years. Since the recession, the green line on this chart, if you've got very fine eyes, you can see it on the top chart, fell after the recession and has not recovered subsequently. That's much clearer on the bottom chart, which is just measuring the last few years, the period since the recession. The green line on that chart, the one at the bottom, is the UK. The blue line, the one at the top, is the US. And the ones in the middle are Germany and France. And what this illustrates is that just since the recession, a gap of 12 or 13 percentage points has opened up between productivity in the UK and productivity in the US. Absolutely colossal gap, the like of which this country has never seen. We've never had an experience that bad in terms of productivity. Why do I keep going on about productivity? Because productivity is the holy grail for macroeconomic policy. If you can get productivity growing over a long period of time, as we have done for the last 150 years, then standards of living increase. People become, in real terms, better off year after year. If it doesn't grow, then you can't. Not only that, you can't achieve the other objectives of government either, such as deficit reduction and so forth. We have a productivity problem, and as far as I can tell, and the purpose of the research that we've undertaken on the behalf of the ATI is that the ATI could be part of the solution to that problem. What drives productivity? There's a lot of literature in this area, as you can imagine. This is thing 1 through 10 in terms of the goals of macroeconomic policy. Understanding what drives productivity. Some of the things are obvious. You need a strong, stable government in which businesses can flourish that's reasonably straight, not too corrupt, reasonably reliable legal system that doesn't penalise business too much. The UK traditionally and still scores pretty well on that front. It still does. You also need an open, flexible market economy with a preferably biased towards efficient sectors, highly productive sectors, supported by skilled labour and a reasonably light regulatory burden. UK scores relatively poorly on this front. It's got an open, flexible economy, but the sectoral balance is not particularly great in the UK anymore, and it's substantially less good since the recession, since the contraction of the financial services industry in the UK that's happened since the recession. Which was a highly productive sector. We've got a severely impaired banking sector in this country, and that's a problem. We need to think about rebalancing towards more productive industries, such as, for example, aerospace. And finally, support for the final driver of productivity is support for activities that boost the whole economy, not just individual companies or individual sectors, but the economy in the round. Networks of any kind do that, transport infrastructure, that sort of thing, but also, and vitally, crucially for this research, R&D and everything that's associated with R&D does that, generates spillovers, productivity spillovers and benefits for the rest of the economy. Productivity, in terms of what we can spend and how that spending can boost productivity, thing 1 that's generally addressed in the economics literature is investment, fixed investment. You spend more money on plant and machinery, on buildings, that kind of thing. The trouble is in the UK, again, to item 3 of bad news from the UK's perspective, is on the investment front. The green line on the chart on the left there is the UK. That's the one at the bottom again. The investment share of GDP in the UK is lower than it is among any of our peers in the most advanced economies around the world, and it's falling over a long period of time. There just isn't an appetite at the moment for firms to invest in the UK. We can't really look to that, at least not in the short term, as being a source of new productivity growth. The chart on the right is the one that we're getting at in this paper and that the engagement with the ATI is really all about. It's a chart of the share of R&D expenditure in GDP across a range of different economies and over time. The green line on this chart, not quite the bottom, is the UK, second to bottom. There's always someone worse off than yourself, and the someone in this case is Italy, who's the bottom of the pack in terms of R&D spend as a share of GDP. But the UK is substantially behind Germany, France, the US, and Japan in terms of the share of its R&D in GDP. We're running at numbers like 1.7% of GDP, whereas if you look at the US, for example, it's running at 2.7, numbers like that. And that matters over a long, long period of time, over 10 years and more. The accumulated effect of that differential in R&D spending amounts to a big change in the levels of productivity that the different economies are achieving. The government knows this, industry knows this, not just this government, but every government around the world understands this logic. And it's been part of government thinking for a number of years. It has lain behind the introduction of R&D tax credits, for example, by successive governments in the UK. The trouble is that the introduction of those tax credits, the best that we can say about those is it stopped the decline in R&D spending as a share of GDP in the UK. It's not reversed it, not at all. And what we need to do is reverse that decline, start pushing up to the levels of R&D spending that are enjoyed by our peers. That would imply 60% more R&D spending than we're currently doing in the round across all industries, which would imply the same thing for the aerospace sector, amongst others. The natural way to distribute it would be the way R&D is currently distributed across industries, which is given in this pie chart here, that aerospace features in the top 4 of that pie chart in terms of R&D spending in the UK. A 60% increase in R&D spending in the round would bring us up to the level that Germany and France and the US are already running at. Why would that matter? Because there's a wealth of economics literature. They say about economists, I speak as one of professional experience in economics for 30 years, the dream of every economist is to grow a third arm so that I can say on the one hand, on the other, and on the other. Because every economist, we're told, is always about, on the one hand, you can have this, but on the other hand, that, or it's give and take, it's a trade-off. In the case of R&D, and almost uniquely in that case, that is not true. The economics literature is almost uniformly, overwhelmingly in agreement on the 2 points that are summarised in these 2 charts. One, the social returns to R&D spending are very, very large. The returns to the economy as a whole are very, very large. Quite how large? Well, you can choose which bit of the literature you want to look at, but very large, suffice to say. But the private returns, the returns that accrue to the company that spends the money on the R&D, are small, which opens up a question, right? If a company that's considering an R&D project can look in expectation, this is the literature on the private returns to R&D, the most likely outcome for a company thinking about undertaking R&D is it will make a return of about 5% on its money. So I spend 100 quid now, I get back 5 quid in profits in every year for the next decade or so. 5% return on my expenditure, that kind of money. That would be about the same as what I'd get if I spent the money on, I don't know, buying stocks and shares, or if I put it in a high interest account, or if I spent it on fixed capital, if I spent it on plant and machinery, something like that. But the risks to R&D spending are much higher than any of the risks to those alternative uses of my money. Spending it on fixed investment, I pretty much know what I'm going to return and when I'm going to get it. Spending it on stocks and shares, all right, there are fluctuations in the markets that we all know about, but you can anticipate a return like 5% or something like that over a decent period of time. Left to themselves, if this is what companies are facing, they will not undertake R&D on anything like the scale that the government would wish them to in order to achieve the social returns to R&D that are pictured in the chart on the left. The private returns are low, the social returns are high. That is the role for government to intervene, and the right type of intervention is things like the ATI, where the actual commitment of government money is small, and what the aim of it is to unlock and make sense of higher levels of private spending on R&D than would otherwise be achieved. But what's the logic of the ATI? What's the ATI trying to achieve, and how might it achieve it? This is a picture, two pictures here. One which says the aerospace sector, like other manufacturing industrial sectors such as automotive sector, enjoys higher levels of productivity than the UK average. So the blue line and the green line are the aerospace productivity and automotive productivity in the UK, and the orangey line is UK average productivity. If we can have more people employed in aerospace and automotive and other high productivity manufacturing sectors, then UK productivity as a whole will go up. It's called batting average effects. You've got more people with a higher batting average in your team, so you're going to score more runs. It's that kind of logic. One function of the ATI is to encourage the growth of more aerospace companies, more aerospace employment in the UK, and to the extent that it's successful in doing that, it will drive up UK productivity in the round. But the other, and possibly more important effect, from the macroeconomic perspective anyway, is the effect on spillovers through other companies and other sectors in terms of the productivity that they achieve. How does the ATI help those spillovers to be achieved? The picture on the right is two normal distributions for those of you who care about these things. One is a distribution of the returns. If I'm a company, a UK aerospace company, considering undertaking an R&D project, what are the returns that I would expect that project to generate? It's not just, here's the average, but what are the risks attached to that average? The average here is the 5% that we pointed to earlier, and the risks are large. But in other words, the tails of this distribution are fat, they extend a long way in both directions. Why does this matter? It matters because there's a large chunk of this distribution, 36% of, that is below zero. In other words, the returns to my money will not even be in positive territory, they'll be in negative territory. I'll be actually losing money on that R&D expenditure. All right, there's 64% that's above zero, but actually there's 60-some%, which is lower than what I've termed the WACC, the weighted average cost of capital in the aerospace sector. So if I'm having to raise money to undertake R&D, how much is that costing me? In aerospace right now, 8.6% is the answer. And left alone, 60-odd% of all the R&D opportunities that are facing aerospace companies would deliver me a return that's lower than the cost of financing that R&D. What does all of that mean? It means we won't do it. Aerospace companies will not undertake that R&D. As a rule, left to their own devices, they won't do it. What's the purpose of the ATI? The purpose of the ATI is to de-risk these projects, to reduce the spread, the width of this distribution, and to shift the mean up to increase the expected return to R&D. Doesn't take much to achieve those outcomes. It's not a huge commitment of government money, but it's a commitment. It's a commitment over time to a culture of innovation in aerospace and the commitment of money through the ATI that achieves both of those outcomes, narrows the risk in this distribution and increases the expected return to the point where better than half, substantially better than half of the returns exceed the cost of capital. And it's that kind of nudge, it's that kind of just getting over the hump that flips a project, an R&D project, from being a stupid thing for an aerospace company to contemplate, for it to become a sensible thing, a profitable thing for that company to contemplate. It's not, we're not asking, the ATI is not about the government committing shed loads of taxpayer money to undertake R&D projects on its own behalf in the aerospace sector. No, it's about crowding in, unlocking the private demand for aerospace by just changing the arithmetic for aerospace companies in exactly this kind of way. Increase the mean, reduce the risks to aerospace R&D. And thus far, it seems to be working. We've got to date, an additional 1 billion of aerospace R&D projects that have been announced in return for a government commitment of 150 million a year. So 1 billion in total over a 7-year period for, I think I've got those numbers right, James, for 150 million of government money per year. If that can be continued, if anything like that can be continued, it's a model for government intervention that's aimed at boosting productivity, not just in the aerospace sector or in manufacturing sectors, but right across the economy as a whole through the spillover benefits that are generated from R&D. The UK needs much more than that, in truth, to address its productivity shortfall. Even if you got the aerospace sector to be 60% larger, it would be a great thing for aerospace, it would be a great thing for the UK economy. The impact on UK productivity would be numbers like 0.4 of 1% a decade from now, if that were to be delivered, which is not negligible. It's small, but it's significant. What we really need is a joined-up business plan for the UK PLC that does this across the high R&D intensive sectors in the round in the UK. If that were to be done, to be replicated across all of those sectors, then we wouldn't be talking about 0.4 on the level of productivity in a decade's time. We'd be talking about 0.5% on the growth rate of productivity every year. And that sort of change is the kind of change that's in the right order of magnitude that can get us back to competing on level terms with our peers in Germany, in France, in the US, and in Japan. The ATI, what is really exciting and interesting about it is it provides a very clear, efficient, to some extent tested, all right, it's early days, but tested model for government intervention that is not hugely costly for the government, but does unlock this potential impact on productivity across the economy as a whole. I commend the policy to the House. Thank you.
Thanks, Erik. So that brings us to the end of the presentation. So I'm conscious that was a lot of information that you've just been exposed to. And on the way out, you should pick up your copy of the public strategy document. The ATI is also releasing 10 detailed documents that explain the different dimensions that make up the technology strategy. We are treating those as quite confidential documents, so if you would like to receive them, go to the ATI website and you can register your interest in those documents. As well, we'll be releasing on our website the report that goes with this presentation by Erik, and I do encourage you to download that and read it because it's a fascinating read, and it also gives you an insight into what we are thinking within the ATI about how we drive this economic agenda for the UK, this spillover effect that Erik has talked about. But at this stage, there is an opportunity, a very short opportunity, to ask questions if you would like to. So there's a mic going around.
Thank you very much for the presentation. Peter Unwin from the Whitehall and Industry Group. Just on the last side, a technical question and then a strategic one related to it. The technical one, I didn't quite understand the gearing in your first bullet there. You're saying £1 billion over 7 years for 150 million a year. Does that mean in effect 50-50
yes.
Government and industry? Yeah. And in fact, given the importance of sustaining this over a period of years, how does the ATI cope with the sort of the political timescale of governments, even the change we've had since you were established, and looking ahead, over the next electoral period? How secure are you against the whims of current Treasury and future governments through spending reviews and elections, etc.?
Right, so, well, I mean, we're fortunate that the original commitment was a 7-year commitment horizon, of which we're, a few years in. So, the ATI will be running, expecting to run through to the end of that. I guess the interest really then is what next beyond that commitment. And of course, we're waiting and interested to know what the outcome of the current budget is going to be, and no doubt that may give us some things to reflect on, but we don't know. We're operating through to the end of that 7 years, and we're looking ahead beyond that as well.
Gareth Williams, ATI board, also of Airbus. Perhaps to add a comment, it's interesting to observe from a European perspective that many of the competitor nations that were indicated in the charts are able to sustain commitments over a long period of time. One can think immediately of the LUFO programme in Germany, which is committed until 2020. Of course, the European Commission's Framework 8 programme called Horizon 2020, which in effect continues through to 2023. And in France, a number of different schemes have evolved with a similar long-term commitment. So maybe a comment on the last observation. We're in an environment which to some extent demands that type of commitment. Whether or not it can be maintained, obviously time will tell. A question, if I may, on de-risking. The argument seemed to be that there is value in ATI for de-risking R&D projects for UK companies. And the point that was picked up was on the leverage effect of funding. I just wonder on your thoughts of having a programme of projects and the value of de-risking by having a continuity of understanding and alignment of ideas and timetables as a means of de-risking, rather than just the injection of finances.
Thank you both for the comment and the question. The question I think you've already answered. Actually, you've answered it as exactly as I would answer it. The key role of the ATI in de-risking R&D projects is precisely that commitment, the time dimension of it, and the program of R&D, as you put it, that flows from that. If I'm a company considering one R&D project, then I'm looking at a wide. I don't know whether 10 years hence, when it bears fruit, there will be a market in this country or any other country for it. I don't know whether it will be superseded by somebody else's technology they've done in between times. I don't know whether there'll be the skilled labour here or the supply chain here that can support that. I don't know any of those things. The risks are absolutely colossal. But if you tell me that you've got a strategy in place which ensures that that skill set, that set of supply chain companies, that culture of innovation is going to be here 10 years hence, then suddenly the risks are lower. And then if I say, well, how about therefore thinking not just about one R&D project, but about a whole programme of them over a period of time. Each individual one will have risks in either direction, but the whole programme, the risks are much reduced. That's just a law of statistics, law of large numbers it's called. And the more that, but in order to get that kind of thought process going in industry, you have to have the kind of commitment that's demonstrated through the ATI.
Yeah, just to add to that, I mean, the ATI has established this roadmap, this strategy that provides that long-term vision. It shows we have a plan, and if it can be, if the commitment can be sustained around that plan and industry can coordinate around it, then, as you say, that helps to de-risk in the long term, getting to those market opportunities. Any other questions?
Mark Stewart from Airbus. I was interested in your slide on productivity, and particularly you saying that aerospace and automotive are leading the way as the vanguards in UK industry. Two questions in relation to it. One, we know it because it's a hot topic of the Chancellor in particular. Are you able to differentiate within the sector so you're able to show for productivity across the sector and through the sector? Question number one. And question number two, are you able to compare and contrast in the same way as you did for Germany, France and the US, the productivity for the sector for those countries as well?
Yes and yes, in principle. Right here in front of you, no and no, I'm afraid. Certainly, that's in principle something that can be done. You can go company by company. It's just a question of what's the gross value added generated by Airbus, for example, in the UK, divided by the number of people that Airbus employs. There's your productivity number. And you can do that for every company that has those data. What do I mean by value added? It's profits plus wages and salaries, basically. And you can do that across countries too, sector by sector. There are some differences in the norms, the way the data are gathered in different countries, but broadly speaking, that might make small differences, but the big picture will be correct.
The differences in R&D country by country from an aerospace sector pan out. I think it'd be quite interesting to also align alongside that the productivity measures as well. And with that, we might even get a more convincing argument as to why continuing to invest in UK aerospace is the right thing to do.
Indeed.
I hear you. I can't do it right now. I wish I could, but yes.
And I think I heard in your question there, perhaps you were alluding to this, the idea that productivity within the sector is not going to be uniform. And so if you pick apart the supply chain or different parts of the sector, we're likely to find differences. And indeed, that's what we're interested in trying to address. I must have mentioned the word competitiveness 10 times during the presentation, and that's about trying to raise the levels of all elements of the aerospace sector to that highest productivity level. Yes. This probably needs to be the last question.
Hi, yes,
anyway,
Dick Elsey from the High Value Manufacturing Catapult. It's a contribution rather than the question. I mean, as we wring our hands over the act of faith funding, is it actually going to deliver an economic impact? Well, the High Value Manufacturing Catapult's been working in the de-risking space for 3.5 years formally now, and it's not in the public domain yet, because we've only just signed it off, but we've had an economic impact study done on the pound of government money that goes into core funding in the catapult, and the actual result of what we delivered in 3.5 years is a £15 economic impact for every pound that goes in. So well over £1 billion of embedded value already off the act of faith in the catapult. So I'm very happy to share that data with you when it goes live. But we're beginning to see some real economic impact measures that we're all under pressure to demonstrate. But a big chunk of the work we do in the catapults for aerospace. So QED, I think, is the...
Yeah, great. Thank you for that contribution. I think we have to draw it to a close there because we all need to be downstairs momentarily. So thank you very much for coming today. Let's head on down.